think I'm live on YouTube right now. So y'all jump over there to YouTube. Jump over there to YouTube. Everybody just coming in. Jump over there to YouTube. I'm live on YouTube right now. When somebody get over there, somebody put a 1 in the chat so I can see somebody over there. Then I'm gonna go ahead and end this. If you just tapping in, hit I'm on YouTube. Jump over there to YouTube, www.youtube.com/the new TLR. I see what they say, Kushya. Let's get it. We over there. Y'all jump on YouTube, man. Gone. Yep. What's cracking, family? I know a whole lot of us come up cousins, so I ain't gonna hold you long. What's up, Tanisha? I ain't gonna hold you long. So is my chat working? Can I see my chat? Somebody put something in there. Can I see my chat? Yep, I see it. All right, I see a 1. Okay, I see it working. All right. I ain't gonna hold you long. I'm gonna jump right into it because I know a lot of us are come up cousins, and it's Thursday. Today Thursday, right? It's Thursday, and I know everybody want to jump in and check out what Mark and Jolene talk about at 8:30. So I ain't gonna hold you long. So we just gonna get right into it. You feel me? All right. So today I wasn't trading today, but everybody, if anybody don't know, last night or yesterday right at close around by 3:20 before market closed, I saw the market setting up to go down, and so I tried to swing a MES contract overnight. I got into the position around by 3:20. You know what I'm saying? It came to the spot where I wanted it to come. Got in the position. I had my stop loss hit above the previous swing high. And at the end of the day, they pumped it and ran up there, ran my stop, took me out. They took my buy stop out, and then throughout the night, it sold down a little bit, and then sold down some more, came back up to the same spot again, and then dropped it like it was hot after the Fed made their announcement, right? So I was already bearish on the day, and then when I peeked at the market, I saw that it was my setup, but right before what's up, Draco? Right before the drop, it was my setup right before the drop. And then, so I looked at the market to see what was going on, and I plotted out another spot, and I went on my stories. And anybody that looked at my stories, I said, I'm not trading today. But if I was trading today, I'll be looking for the market to trade right back up into this area right here. And I explained why. I said, we did this, made the fair value gap. I'll be looking for the market to trade back right here. And I'll be doggone if the market ain't trade right back to there and dropped it like it's hot. Dropped it. So if anybody took that hint that I gave out, you was feeling good today. And what I want to do, I want to show exactly what I was talking about. And then instead of breaking it down on the futures, I want to go into the trading platform and show if you trade. Let me turn this focus off so it don't be running around all over the place. If you trade options, and you trade if you trade the SPY and the SPX, you know what I'm saying, you could use this same exact setup and get your SPY and option position. I mean your SPY and SPX positions, and I'm gonna show how that would have played out today. So let me switch over to camera and desktop. How y'all doing this evening? You know what I'm saying? Y'all, how y'all doing this evening? We're gonna try to get through it kind of quick, because I know the cousins want to go check out Market Joe. Oh, thanks. What I did, Tranisha? I don't fool with the NQ. Said I don't fool with the NQ. You can have it. You can have them gift baskets. Spider gang. Okay. So I already took all my, as ICT say, lipstick off the charts, right? This is a 60-minute chart. I already took all my lipstick off the charts. Let me find 8:30 today. Let me see if I can find. Let me get my tablet out the way real quick. Let me find 8:30 today. Control copy, Control V, double click. Find 8:30 today. Get it to 8:30 today real quick. All right, so all right, this 8:30 today. All right, let me drop down to the 15-minute. Y'all know how I do. You know what I'm saying? Drop down to the 15-minute, and we gonna look at. Oh yeah, yesterday. What it closed at yesterday. Yesterday, y'all see this? Let me change to the R. Y'all see this? Let me blow this up a little bit. Yesterday. Where's yesterday? Let me mark. I ain't got all my marketing stuff on there. Let me mark this real quick. Because when they go to moving around, I ain't got all my lipstick on there, as ICT like to say. All right, that's yesterday. That's, yeah, the 9th. Yeah, okay. So, y'all see that? Y'all see that fair value gap right there? Y'all see that fair value gap right there? Okay, boom. You see it. Now, the reason why I saw that I was biased on the downside for the market overnight and going into the day, two reasons. Technical analysis and macroeconomic stuff. You feel me? Right? We got a cousin speaking another language. I don't know what that name say. But so everybody know, the Fed was going to announce they stuff today. Everybody was waiting on that rate high. I mean, the CPI numbers. You know what I'm saying? Everybody was waiting on the CPI numbers. Everybody know inflation up. If you go to Walmart, if you go somewhere, inflation up. If you go to Chick-fil-A, inflation up. Not Chick-fil-A, Chipotle. Chipotle been killing them. I still be buying it. But inflation up. If you buy anything, inflation up, right? So everybody know inflation running hot. That's on the macro level. You feel me? Technical analysis wise, right? So I already knew the CPI numbers were going to be hot. I kind of had a feeling because I know inflation up, right? And if for anybody that don't know, inflation up like 7.5% compared to from last year. So it's up. It increased 7.5% since last year, right? So it's up. It's hot. Right? So dig it. Right? Yesterday we was just, slowly stepping on up. We were stepping on up, wasn't a whole lot of volume. We just stepping on up. Right? So I'm thinking, what is the catalyst to take us up? All we got are catalysts to bring us down. What's the catalyst to bring us down? Inflation can be hotter than what the market expect. And like I always say, I don't like the word baked in. I just like did the market expect this or not, right? If inflation be hotter than the market expect, we gonna come down. You know what I'm saying? If inflation don't be as hot as the market gonna expect, we ain't gonna take off. Why we ain't gonna take off, Tim? Because we already know the Fed raising rates. What raising rates mean? Raising rates mean companies that need to borrow money to grow can't borrow money at a lower rate no more, so people ain't gonna be dumping their money into them companies right now, right? A lot of tech companies do that. A lot of, new growing companies do that. So the market ain't gonna really be able to scream to new highs without tech. You know what I'm saying? Without consuming discretionary. You know what I'm saying? And a lot of these companies in these sectors need to borrow money to grow, right? So we ain't got no catalyst to make us scream higher. You feel me? So the only thing we can do is drop lower if inflation is hotter than we expect it to be. And everybody know inflation hot. You feel me? So that's why I was biased to the downside, right? So looking at this gap right here, right? We going up, coming down, going up, coming down, going up, coming down, right? So dig it. So we going up, right? And then when we made this last swing right here, boom, boom, went up, then we came down and we broke it. And when we broke that swing, right, here go our pattern. 1, 2, 3 candles, and we had a fair value gap right there, right? So when we was trading back up into this, I took a MES contract going short, right? And I had my stop up here because I want to just go short, and I'm just going to keep it on overnight. And I'm going to see, because I ain't going to watch it tonight and watch it all night, try to figure out when I can get in. I ain't got no theta or nothing to worry about. You know what I'm saying? So I was just going to leave it on overnight, you know what I'm saying, and just ride it down, right? Like a funky dog. They pumped it up at the end of the day, right? This right here is the 1600 candle right here. No, it's 1600 candle right here. Look at that. Came up. And right there, this candle right here is the one, either this one or this one. One of these candles took me out. Either the 1545 or the 1600 candle took me out. I got in on the 1530 candle right here because I got in around about 520. You know what I'm saying? So around about 520. I got in around about 520. And if I would have taken it at the top of the gap, yep, this candle here would have got me. They would have got me there anyway. If I took it at the top of the gap, they would have still got me here. But I split the difference of the gap, and they got me either on this candle or that candle. I can't remember because I wasn't home. I had went to go pick up the boys. Anyway, so that was my thesis of holding it overnight, and I was going to sell it down, right? So as you see, right, all night long we hovered around this area right here. We can pretty much just say it's like pretty much the same area. The top of that gap right there, the top of that gap right there, it's pretty much the same area we've been hovering around, that they've been, you know what I'm saying, messing with the liquidity all night long. All night long. You feel me? Right? So I'm gonna put a line there, matter of fact. I'm just gonna stick a line there. This ain't got nothing to do with what I'm about to talk about, but I'm gonna put a line there just so you can see my mind state when I woke up. I mean, when I came and peeked at it, right? So we sold down here and we went up, messing with that liquidity again, came down a little bit, still keeping these relatively equal lows. Look at all of these relative equal lows right here, right? So you already know they gonna raid them. They gonna raid them. You feel me? Here we go right here. We coming. Look at this right here. What is this right here? This is a super big fair value gap right there. From here to there. Super big fair value gap. Right? We sell it down. Right? We come back up into the gap. Right? Play around. Scare some people a little bit right here. Yep, but you stop up here. Remember, your stop for the gap is the previous high. You stop up there, right? Get into the gap again. There you go. There you go. Where is it? Where is it? I can't see it no more. I can't see it no more. Why I can't see it no more? Because it done sold down, 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 down. It done sold down, 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 right? And so let's look at here, this trade here for coming back into this gap, because we ain't gonna worry about the news candle trade. I don't trade news candles. A lot of people don't trade news candles. So we're gonna look at this one over here. We break it down, come back up, and then drop it like it's hard, right? But we're gonna look at it how it can be taken for options. How it can be taken for options, right? And we're gonna look at it. We're gonna look at it 2 times. We're going to look at 2 different times. We're going to look at it if you got in here, right? If you got in here, you could have shook a little something there, right? But this sideways motion probably would have did a little something to your premium. I don't know. And you could have got it in over here, right? For the same sell-off. Why? Because it came back to this gap right here. Boom. Y'all got it? Y'all got it? It came back to that gap right there, right? And then, if you look right here, this setup right here, you see it there? Came right back there. Boom. Y'all ready? Now, let me map it out. I think I was looking at this one on the 1 minute. I'm going to map it out, and then I'm going to look at, matter of fact, let me put up trading view and look at the, SPY. Here go the SPY. Right? So let me get my times real quick off of here so that I can it's almost 8:30. Let me get my times off of here real quick so that I can show you that it work on the what's the name? Cause this was the, do I got my lipstick on here? Do I got my lipstick on here? Let me see. For the people in the back. Can I see my stories on here? Can I see my stories on here? I can't see my stories on here. I wish I could see my stories on here. Yeah, I can't see my stories on here. Why you can't see your stories on the computer? I wish you could see your stories on the computer so I can show what I just go to that one. Okay. This is afterwards.
And this is not a call out service.
This is afterwards. This is afterwards when I was showing it. This was afterwards when I was showing it. I was just trying. I don't have the one when I don't have the one when I actually. I was trying to show the thing when I actually did it, but I don't have the one when I actually did it beforehand. I just got it once the play had already went through. Okay, I don't have 2 minutes on here. I wish I had 2 minutes on the trading view. Trading view ain't giving me 2 minutes. All right, so what time I said it was? What was it like? 12 something. Here go the gap right here. This the gap we looking at that formed this morning, that morning. What's my rectangle? That's my rectangle. Okay. So here's the gap. Right here. Right. There's the gap right there. I ain't doing this like super perfect. Yeah, right there. Around there somewhere. And see on the 2 minute, as you can, well, I wish I can get to a 2 minute. I wish I can get to a 2 minute. Cause a 2 minute. I'm gonna look at a 5 minute also. Right? So on the 2 minute, like the 2 minute, the 5 minute, the gap is here. Right? The 2 minute, the gap was like right around here. I can show you the 2 minute on trading, on Ninja Trader, just so you can see what I'm talking about. Right? I'm gonna set 2 minute candles on here, and I promise we gonna get to it. I promise we gonna get to it. Cause see that, boom. So we gonna go here, boom, cancel. Right. So see how big the gap is on the 2 minute? Boom. That's the 2 minute. If I get on the right thing. Okay, so that's the 2 minute gap right there that we're looking at, right? So we traded down, we came back up, broke above the liquidity, came down, made the swing low, made a swing high, made a swing low, broke below the swing low, right? Traded down, and we came back up into it, back into that fair value gap, right? Right, that's what we at. Swing high, because I said we ain't gonna fool with this one over here. We ain't fooling with it because that's a news candle, right? So swing high, swing low. Once it went back up into the liquidity, broke the swing low with authority. Very next candle, made the fair value gap. That's the 2 minute. Everybody know I like to watch the 2 minute, right? That's the fair value gap that I made on 2 minute. What I usually do, I drop down to the 1 minute to see if I can get a better risk to reward, right? And as you see, I'm gonna put a line where the 1 minute, gap is, right? Boom. That's the bottom of the 1 minute gap right there. That's the bottom of the 1 minute gap right there. So that's why, and then I say, you front run it by 3 ticks. You know what I'm saying? So if you front run it by 3 ticks, copy this right here, paste it down, right? 69.25. That's what it said on the other thing. 69.25. I'm gonna make that a yellow line, right? Make that line yellow, just so, cause I know how to move around. What's the name? A little bit quicker. That's why I'm just doing it in here instead of doing it on Trading View, right? Right. So make that a yellow line. There we go. So that's the gap is made on the 2 minute, right? I drop down to the 1 minute to see if I can get a better risk to reward, right? Front run the 1 minute gap by 3 ticks. So that puts me at a better risk to reward inside the 2 minute. Because if I take it off the 2 minute, I'm gonna be getting in down here somewhere. Right? Right? I'll be getting in there if I took it off the 2 minute, which is not a bad place. Let's change the color of it. Let's change that to green. Okay. All right. Everybody follow me so far. Y'all, if y'all follow me so far, put a 1 in the chat. Now, If y'all follow me so far, put a 1 in the chat. Okay, while I'm looking to see if any one's coming in, I'm going to go to the top of the setup again so everybody know the setup. Then I'm going to switch over and show you what options you could have taken. We at 829, so I know everybody want to get over to the come up series, right? So here we go. Here go the setup, right? That's our liquidity line up there that we've been flirting with all day, right? This top one. Make it red. I'll make it red, right? Make it red. That's the liquidity line we've been flirting with all night long, right? So we sold down after the news candle. We came back up, right? We stepped up. We ran the liquidity there, right? Right? Once we dip into the liquidity pool on this first candle here, once we get into the pool, what's step number 1 that we looking for? Here we go, bloosh, we splash in the pool. What's step number 1 we looking for? Right? Step number 1 we looking for is make a swing high and a swing low, right? We got a swing high right here. We got a swing low right there, right? Okay, so then what we looking for? We bearish. We looking for reasons to sell, right? Here we go right here. We break this swing low with authority. That's step 2. We break the swing low with authority on this candle right here. Step 3, what are we looking for? The very next candle needs to form a fair value gap from this candle to this candle. So we on the 1 minute. So the 1 minute fair value gap is up here. That's why I put that blue line right there. I marked it on the 2 minute because the 2 minute is my favorite one to look for it on. And you can either check the 1, 2, or 3 minute charts, right? So I marked it on the 2 minute and then I dropped down to the 1 minute to see if I can get a better risk to reward. I could, right? So this is the bottom of the 1 minute gap, front run it by 3 ticks. That's the goal line. That's the entry. If you looked at my thing, I showed you the entry was 42, 40, 45, 62, 29. Let me look at it. It was 45. What did I say? Did I click the same one?
50. From 45, 69.
45, 69, 25. 45, 69, 25. That was the entry, right? That was the entry. 45, 69, 25. If I double click that right there, 45, 69, 25 is the entry. You might can't see it. But anyway, there you go. So that's the entry. I'm waiting for it to go back up into there. Step 1, once you go in the liquidity pool, you look for a swing low, swing high to form. Step 2, swing low, swing high is formed. Step 3, break the Step 1, swing low, swing high forms. Step 2, break the swing low or swing high with authority. Step 3, very next candle, form the fair value gap. Once the fair value gap formed, now you're waiting to get in. I missed something, but y'all get the gist of it, right? So here we go. We trading. Now remember, we getting in at this yellow line. If we got in for off the 2 minute, we would have been in here. We would have been, this candle right here would have got us in on the 2 minute, right? This candle right here would have got us in on the 2 minute. So we're gonna check the price of it, getting in on the 2 minute. What time is that? Somebody write this in the chat for me. 11:57. Write 11:57, 2 minute in the chat for me. Right? And then 12:31, 1 minute in the chat. Somebody write that in the chat for me. 11:57, 2 minute. And then 12:31, 1 minute. Write that in the chat for me. Them the times. All right. Okay. So here we go. So we're going to look at, let me get to my trading platform. Going to, let me go into sim mode. All right. So now, y'all see that we, I looked at everything on the futures. Right? I'm yelling. I'm yelling. Am I talking real loud? Somebody said stop yelling. Am I talking super loud? My bad. Why y'all ain't tell me that? Tony, I appreciate that, man. I appreciate you for telling me to stop yelling, Tony. Why y'all ain't tell me I was yelling, man? Why y'all ain't tell me I was yelling? Is that better? If that volume better, somebody put one in the chat if that volume better. All right. SPY. What y'all want to look at first, SPY or SPX? I'm good or was I yelling? SPY or SPX? Which one y'all want to look at first? Put it in the chat. SPY or SPX? All right. SPY or SPX? While I'm pulling up my options. SPY. Okay. Just we say Trinice say I'm just excited about charts. Okay, so dig it right now. Let me show you real quick if I can get the charts to look the same. Let me get let's see if we can look at it on the 5 minute chart here. Okay, so we're gonna look at it. We're gonna look at it on the 5 minute chart here. Okay, so with a 5 minute chart, I'm gonna show a 5 minute chart there. Then I'm gonna pull up NinjaTrader 5 minute chart right here, cause we already got all the levels and stuff off NinjaTrader. I just want to show y'all. Put this on a 5 minute chart, cause all I do, I just watch. I watch the ES to make my entries on the SPY and the SPX. Right? See if I can get these windows side by side here. Oh, God dog it. Where did it go? Okay. So, pop this over here. Like that. Put that there. Boom. Okay, so 5 minute chart. And it's gonna be like, remember now, what's the name go like all night. Okay, let me see if I can change this to 24-hour sessions. Okay, there you go. Change the 24-hour session so you can see like some more of the stuff. But remember, the ES go all night long, so you got to remember, like, it's like overnight stuff is gonna look slightly different. You know what I'm saying? So we're gonna look. What time is this right here? 8:30. 8:30. Okay, so look, this the 8:30 candle. This is the 8:30 candle right here on the ES, and this is the 8:30 candle right here on the SPY. Right? If you look at those candles, the ES come down. I mean, the ES come down and go back up, come down, go up, drop. Right? Now look at the SPY. Right? Shrink it up a little bit. SPY. Let me get the ES back up there. Right? SPY, 8:30 candle on the SPY. Over here, come down. Right? Go, come down, go back up. Look at them. They moving in tandem. Tick for tick. You see right there? Tick for tick. Look at the ES, down, up. See? They move in tandem. Tick for tick. Right? So that's why I just watch the ES. I don't even watch the SPY. I just watch the ES. And while I'm watching the ES, right, I have my option station pro up. This is option station pro. Boom. This is just one of the things inside my trading platform, and it'll be whatever your option chain is in your trading platform, right? So I'm just watching. Get out of there. I'm watching the ES, right? I'm watching the ES, and I'm waiting for it to come back to this line right here, right? That's the 44.69.20, right? That's the 44.69.20. And then let's look at, so I can give you the price of the options, right? Oh, let me open up a spreadsheet, my fancy dancy spreadsheet, so we can get the we can compare the prices side by side. Strike comparison. Boom. We're gonna get the strike comparison, right? I'll move this over here real quick. Right? Just sit this over here real quick. And then so at 11, what I said that was? What was it? 11:57 and 12:31. So at 11:57, right? At 11:57, let me put this back over here. I made it a little bit bigger. I'm about to fix this later. Right? So at 11:57 today, right? 11:57, the SPY was at, and in real time, it won't go this slow in real time because you only watching, like it's going this slow because I'm having to look back and see what it was. But in real time, you just gonna be watching Option Station Pro, and you're gonna be jumping in. You're gonna already know what your strike gonna be. All right, so 11:57. All right, it opened at 455.99, right, and it closed at 456 at the end of the minute. So we're just gonna go with what it hit. So it hit at the top of that. So let's just go with the high, 456, because that we know we would have been in with the high. So 456.37 is what it was trading at that time, right? And you don't really need this. You don't really need this unless you So 456. So we're just gonna say 456 is what it was trading at, right? And then at 12, what we said, 12:31. So at 12:31, I'm just writing these numbers down. We're going to the high. 456, the same thing. So it's the same price. So we're gonna stick with the same price. That made it easy for us. So 456. We ain't got to worry about nothing else. So like I say, we in real time, you wouldn't have to be worried about fumbling with all of that right there, because in real time, looking at Option Station Pro right here, or any options chain that you're looking at, right there where the two great areas meet, that's where the market is trading at that time. That's an at the money play. Trading at the time. That's an at the money play. And if you want to just get it at the money, you know what I'm saying? All you doing is buying that strike right where it is if you want to get it at the money, right? If you want to get it like on an intraday play, I ain't gonna be trying to go 2, 4, 5% out the money. Furthest I'm gonna go out is 1% out the money, right? So let's see what 1% out the money is. You already see, you looking in real time. You like, okay, it's trading around 456. It's trading around 456. You watching your line. Let's get these numbers first and then I'll talk. 456 minus 1%. So 451, right? 451. Okay, so I'm gonna write 451 down. 451 is 1%, right? So where my spreadsheet at? We're gonna set my spreadsheet up just so I can go ahead and plug it in quick. We're gonna change. Don't worry about this. We're gonna change. We ain't gonna do in the money. We're just doing out the money and at the money. So we're gonna change that to 1%, right? This gonna be 456, and this gonna be 451, right? Boom. Okay. All right. So we got that plugged in. So now, like I was saying, now we're gonna do it as if it's in real time. I just had to do a whole lot of setting up just so I can get to the point where we can do it like we in real time. Okay, so here we go. We're going tick tack. It's ticking. Here you go. These 5-minute candles, right? That's all right. I'm gonna leave on 5 minutes. We just gonna pretend like that. You know, we tick tack. We know where our entry is. We know we trying to get to this yellow. I got to switch it over because the 5 minute ain't hit it. Let's switch it over to the 1 minute. Let's switch it over to the 1 minute. There you go. Tick tack. Okay, 1 minute. Right? We at the 1 minute. We looking at the 1 minute, right? It's going. It's way down here, so we chilling. We going somewhere. We ain't done. Then we get back here. Oh, we getting close. we getting close to our thing. So now we watching. I'm watching Option Station Pro. I'm watching the ES. I'm looking back and forth, and you can do the same thing within your trading platform. If you can get the, you know what I'm saying, if you like how the charts look in your trading platform, you just watch the SPY. I'm watching the SPY. I'm watching the option chain. I'm watching the SPY. I'm watching the option chain. You feel me? Right? And so here we go. We going. And so we trading, and you see what it's trading at. Now, at the time, it would have been way down here on 456. You see what I'm saying? It would have been way down here on 456 at the time. And then, so that's what we gonna look at 456 puts and 451 puts, right? Them the puts we gonna be looking at, right? So when we saying like at, what was it? 1157. Oh, it was the same price. It was the same price, right? So it was 456. It was 456, right? So boom. Here we go. We're gonna click on the 456 put. Where we at? 456 put over here. Click that. Now let me pull up my chart so I can show you here. So this the 456 put, right? The 456 put. So here we go. So at, get back here. So at 11, and see right here, this thing by options, right? Because at 11 was the first one. At 1157, right there. Boom, 1157. Okay, so 1157 to 1231, right there. Relatively the same. It ain't much difference in the price because it's just moving sideways, right? So we just gonna go with the 1157 price, right? Because it's pretty much sideways. It ain't much difference. So the 1157 price, you got in on the 2-minute thing. So 1157. All right, we gonna go with, y'all want to go with the open, the low, or the high, right? Look like the open and the high is the same thing, right? So y'all want to go with the open or the low, 229 or 213. What price that we got in at? Y'all want to get in at the open or the open or the low? Open high or the low? 229 or 213. Which one y'all want to get in at? Put it in the chat. And this is the 456. This the at the money. All right? What y'all want to put in there? Y'all moving too slow. I'm doing 229. 229 for the 456. That's what we got in at, right? Somebody said 213. I seen it pop in. Okay, so we going 213, right? So we going with the low. We going with the low all the way across the board now. Okay, boom. How much was the oh, I forgot to look at. We'll look at when we got out in a minute. So now let's look at the 256. So you watching it. When you came up, when it came up to your point, right? You went in to your options. You went into your options thing. You came over here. You clicked on that right there. You went in. You set everything you need to set. You know what I'm saying? You set your price. You know what I'm saying? You set your price at 213. We said we wanted at 213. Boom. You set the amount of contracts you wanted, right? Boom. You put in your bid. You put in your price that you wanted. As soon as you came up to soon as the ES or the SPY came up to your area that you was watching. Soon as it got there, you put in your order. Soon as it came up here, we got in here. You put in your order to get picked up at 213, right? Now you just waiting to get picked up, right? And when we gonna get out? We gonna get out. Y'all want to get out at the end of the day, toward the end of the day, or y'all want to get out? We ain't gonna be greedy. We ain't gonna go all the way to the end of the day. We gonna get out. What time y'all want to get out? Y'all want to get out here? Let's get out here. What time is that? At, let's say 13:40. We getting out at 13:40. All right. So 13:40, right? We ain't being greedy. We jumping out at 13:40. Oh, we could keep going. Y'all want to go to the end of the day? Look how it kept going. So 13:40, right there. What's this? 13. Let's go to the low of 1339, right? The low of 1339 was 615. 615, right? The low was 615. We just getting straight out. We ain't even gonna do the full day. Oh, let's go ahead and we'll just do the full day. We'll do the full day to make it easy. We'll do the full day to make it easy. Right? So the full day to make it easy. Come over here. The high was $9 and the last was $7.40. Right? We're just doing it for that right there. So the last was $7.40. $7.40 and the high was $9. Right? That's on 456. And then 451. Right? Let's go back. Options. And we're gonna go to the 451 put. Right? At 11:57 and 12:31. This one the same. These the same. They both, yep, same area. Boom, boom. So 11:57, we going with the low. 80 cent. 80 cent, right? 80 cent per contract. So we're going 80 cent per contract. And then the high and the last. What was the high and the last on this one? Boom. So the high on this was 491 and the close was 362. Right? So the high was 491 and the close was 362. All right. So now that I got all my numbers plugged in, now we're going to go in and break it down in real time to make it make sense, right? So here we go. In real time, again, now that we got all the numbers plugged in, right? So here we go. We watching. Boom. We watching. We looking at the chart. Here we go. We know the rules. We know the rules of the setup, right? We got the rules of the setup. We going to the liquidity. Once we go into the liquidity, right? Let's go through it anyway. Even though we know it, we're going to go through it anyway. We go up, we run the liquidity. Once we run the liquidity, we got a swing high and swing low form, right? We break the swing high, swing low with force. The very next candle form the fair value gap, right? The very next candle form the fair value gap. Now, we drop down to the 1 minute to see if we can get a better entry. We could. We pick the entry of, I done messed it up. We picked the entry of 45, 69, 25, right? We picked the entry of 45, 69, 25. That's our entry. Now we just sitting here and we waiting. We watching the SPY. It's dancing. The SPY, right here, we get picked up. Right here. It traded to our area at 11:57, right? Soon as it hit our area, boom, we jump over here and we go in. If we doing what we doing at the money or we doing the 1% at the money. I said for my thing, I was going 1% out the money. It don't matter. Whatever you want to do, boom, that's what you did. You put your order in. Okay, boom, you got picked up, right? You got picked up. Now let's see how we fared throughout the day. Boom. Buying, blank this out. So if we got an at the money strike, right? We paid $213 per contract, right? The max it went up to on the day was $900. The last price it sold for was $740. The max profit you would have seen on the day was $323. I mean 323%, right? And then the max in the gains, like based off of the last price it was, would have been, if you'd have sold it at the end of the day, if you'd have held it to the end, you would have made 247%. If you would have sold it at the max, you would have made 324%, right? Meaning you would have made, at the max, you would have made $687 per contract, right? And for the at the end of the day, you would have made $527 per contract, right? And so here we go down here. This right here where you get the bang for your buck, right? You pay $80 per contract, right? When it reached your price, right? At the high, it went to $491. At the last, it was $362. So that means at the max, you would have hit $514. I mean 514%, right? 514%. Make sure my thing charting right. Gotta check it. Okay, yeah. All right, so there you go. You got 514% on the max for the day, 353% on the max for the day. You know what I'm saying? Meaning, from you made a profit of $411 per contract, all starting from $80, right? And let's just extrapolate that. Just say if 213 divided by 80, right? So if you had $213, you could have bought 2 contracts down here, right? And 2 contracts down there, double that. You see how you get more bang for your buck. That would have been double that right there. But you can see how you get more bang for your buck like that right there. That's why I was saying that. But that's the way that I use, looking at the ES, using ICT trade setups to get into my SPY and SPX positions. That's the way. That's exactly how I do it. That's exactly how I use it. Are there any questions as far as anything I went over? I know I said a whole lot. I know you probably got to watch it 40 different times to kind of catch it. But are there any questions based off of what I was saying? Yeah, puts did hit today. Yeah. 456 puts did hit today. Are there any questions? Is anybody still in here, or everybody went over to watch the come up? Y'all ain't got no questions? All right, man. Appreciate y'all for pulling up. I don't see nothing popping into the chat. We done been on here for a long time. Yeah, ain't no problem. Ain't no problem, Blue Eye. Great info. Yeah, ain't no problem. Yeah, yeah. Just about every day. Like I be seeing it just about every day. And I know folk, be like, well, I don't trade futures. You know what I'm saying? What my sweetie talking about? Wash hands. Yeah, but I use the exact same setup because I trade the SPY. I trade the SPY, and the SPY and the ES, they move tick for tick. So hopefully, through all of my babbling and like I say, in real time, it moves smoother in real time because you ain't got to be going back trying to find what the price was and find what it did. You know what I'm saying? I had to go back and look for all that. You know what I'm saying? Just to show you. You know what I'm saying? All you doing is looking at them side by side. You watching the way the SPY move based off of the teachings from ICT on trading futures because the SPY and the ES move tick for tick. So you just watch the way the SPY move, and when it comes to your entry point, you know what I'm saying, boom, you got your order placed. You place your order, and it worked. That's supposed to be clapping hands. Okay. Okay, clapping hands. My bad. Oh, it popped up saying wash hands. All right, y'all. I'm gonna go ahead and get out of here, man. Go eat my dinner. It's almost 9 o'clock. I appreciate y'all for pulling up. Y'all can go back and rewatch it, see if it'll help. If y'all want me to so it takes liquidity then from high swing and low swing. Tony Red, you must be new here. Shout out Wall Street Trapper. You must be new here. Now, the liquidity, that's a predetermined spot that you looking for the market to go run liquidity on. And let me pull up this right here. So based off of what we were saying over here, right? Based off of what we were saying over here, see, and then you can see, remember what I told you, they bust my head. They bust my head over here. You can see the little arrows showing the entries over there. It's showing the entries over there when it went in, and then they bust me in the head up here. They bust me in the head up there. But yeah, so I went in on this candle right here, and then they bust me in the head up there. But anyway, back to what I was saying, like the liquidity. It's like you looking for where they gonna run the liquidity at, like what high or what low they gonna go get the liquidity, and then what high and what low they going to match up the buy stops and the sell stops, right? So looking at, let me go to a 15-minute so I can shrink up some more of the screen. Okay, so looking at, you know what I'm saying, looking at this chart right here, right? You see I had put this line here because we had been dancing around that area all night. So that's where the liquidity, to get the liquidity to go to the downside, was high in it. You see what I'm saying? That's where the liquidity was high in it. And so once you identify where the liquidity is high in it to the upside and you're bearish, now you're looking for areas that is going to go back to match those buy stops with sell stops. So once they run buy stops up here, right, this will be the first area they looking up under these equal lows here, looking to run liquidity. The next area they're going to be looking to run liquidity is up under these lows right here, this swing low here. So they looking under these, they looking under these. Once they get the buy stops up here, they coming down to match them with sell stops up under here. This news candle pushed it all the way down up under here. So it got all these sell stops down here and then ran it all the way back up to where? The exact same spot where those buy stops was at. Once they got more buy stops, they came back down up under these lows right here. If you look at it, see, they came back. Once they got more buy stops from up here, they came up under these because the news candle forced it all the way down here. The news candle forced it farther than it really wanted to go. And then once it came back up on its own with the algos trading themselves, then the algos came right back up under these right here to match it back up with some sell stops, right? Trade it back up into the fair value gap and then sold it off. So that's what you look at, you know what I'm saying? You already see where the liquidity resting at above these highs or these equal lows or equal highs or whatever. That's where the liquidity be resting. And then once you identify where it's resting and you got a bias, once it start trading towards your bias, then you look where is it going to, you know what I'm saying, replenish the liquidity on the other side. That's how you look for like where the liquidity going. Hopefully that answered your question, Tony. But yeah, man, I'm gonna go ahead and get out of here so I can eat. Been on here for 58 minutes. I appreciate y'all for staying with me this long. I know everybody want to tap into the come up series, you know what I'm saying, but I appreciate y'all for tapping in. Go back and re-look at it, share it with some cousins who you think might take something from it. If I didn't explain it clear, if you want me to break it down in a more structured way, just hit me up, leave a comment, or DM me on Instagram, and I'll put it together in a structured Tim's Tidbit and go through it, and you know what I'm saying, so it'll be real clear and concise, and I won't be all over the place. But yeah, man, till the next time, gone.